Hi everyone, this is a tutorial on setting up the Wolfe Wave indicator and the customizable gap finder in Tradingview. Before we begin, I'd just like to let you know that this Discord server, the Toss Option Discord server, is the first server to introduce a working Wolfe Wave in Tradingview. There are some limitations, however, whenever there is a Wolfe Wave identified, they have been working quite well, especially on the daily time frame. So let's begin with this trading view here. I have the daily time frame showing for Apple. Okay, and what you want to do is probably start off with a clean slate by going to the top here and then creating a new chart layout. Once you do that, you start off with a clean slate. Then you want to go to indicators and go to public library, I think, and then type in Wolfe Wave. There are a lot of Wolfe Wave versions, but I don't think they work. So you want to use the one that here that says Toss Option. This one works. So then when you add it there, it's you should see beta version 1.3. Now, some of the limitations are it won't record past Wolfe Wave patterns. So if you want to record them, you probably want to publish them and save it under your TradingView profile, so that you can always look back and see where the projected targets are, look at what it has done in the past, because once a certain number of candles pass, the Wolfe Wave pattern disappears. Okay, and then if they do disappear and the pattern is still holding, you probably want to manually insert or draw in the projected lines. Okay, so you can kind of keep track of where the target is going to be. We'll talk about that later when it actually happens. So I've added the Wolfe Wave here, and then go back to indicators, and then you want to add, type in customizable gap finder under public library. Customizable gap finder, and then you can favorite that. And once you create a favorite, you want to it'll probably appear in your favorite category. So beta Wolfe Wave, and then customizable gap finder, and then you probably want to add a TTM Squeeze in there. So that's the Squeeze Pro indicator by Mac0. All right, and that's pretty much it for the basic setup. Okay, so once you have this created, you probably want to save it and then call it like daily or Wolfe Wave, I guess, and then just chart Wolfe Wave 1 or something like that, because we're just displaying one chart, right, per ticker. And then you can just go ahead and scroll through this one by one until you find a Wolfe Wave on the daily time frame. Okay, so we got one here on CRM, a bearish Wolfe Wave. Okay, so this bearish Wolfe Wave triggered a bearish signal on wave 5 here back on 27th, and then the target is obviously this peripheral line connecting 1 to 4, and you can actually draw a superimpose a line here just to keep that as a reference. So then publish it, right? And then you'll have a record of this where you think price should reach eventually sometime in the future, maybe in earnings. Okay. Now, there's certain risk management rules that do apply when you take a Wolfe Wave here and you get into options. So obviously a drop like this, which is about 3.5%, would have netted you about 50 to 100%, or maybe 500%, depending on the days to expiration. Inside day candle with the bearish, inside day bearish candle looks like it's going to probably move down in. Then you would have to manage your risk because you don't know if it's going to reach this target, or is it going to do the complete opposite and form a rounding base and move up higher. Now, in statistically, bearish Wolfe waves tend to not work most of the time. They do work a little bit better when a price of a stock is nearing its 52-week highs. But even in those situations, 52-week highs they're not guaranteeing anything at all. Okay, so you need to also keep in mind of your position sizing. So if you get into a position here, you can always put in 2 contracts, close off one, for 300, 400%, and hold one to see if it gets down there. If it doesn't, then you get a clue that it's probably moving in the opposite direction, kind of like on this candle here, or basically turn on the Heikin-Ashi candle, right? Because it turns red, green, and red here, and then all of a sudden it turns green right here. That might be your clue to get out of the position. Okay. So that's the bearish Wolfe wave. Let's keep on going to see if there's any other potential Wolfe waves. So Tradingview is really nice because it's really fast and efficient. So you can just scroll through these without too much lag. Oh, okay, here we go. So this one is Jnog. And it's already, back September 30th, it's already triggered. So you would have taken this. And what you want to do is, obviously, the most important part is when is it going to reach that perforated line where it connects wave 1 and 4, pivot 1 and 4, right? So the target would be about $74. And generally, the way that you kind of predict the time and price is basically projecting a line that converges toward a point in space somehow in the future, because you're predicting the future and nobody can do that, right? You have to agree, nobody can predict the future unless you're a market maker. So you take this trend line and you grab it around pivot 2, and what you want to do is you want to try to get it to the point where it forms an apex at one of these points here or here or here. Okay, now if it picks number 4 right now, that means that it won't converge ever. So there's no time that it expects Jnog to move up, and maybe it's because of an ETF. So you have to kind of introduce another method, and you can't use this one right here because wave 5 triggered before, so if I use this one right here, this pivot right there, it can't be this because wave 5 triggered here and the Wolfe Wave WW is the entry. So that means the point that I created here to force the time to meet price, I would extend it like this, and I'm expecting it to reach $73 by September 13th before the wave 5 even triggered. So this cannot be correct, right? The next one is going to use another pivot, which is this one right here, and then draw a vertical line from here to here. And I think that's as close as I think that's vertical now. So that means that I should get a contract somewhere out in November, okay, after November 5th, first week of November contracts for Jnog, and then the expiration, the strike price I would pick would probably be about the halfway mark. So just getting up to $60 on a contract that expires in November is already a profitable trade. And then you would close off half and see if the rest continues to move up to the peripheral line by the time here. Okay, and then you're going to continue scaling out, of course, your trade on every pump higher. Okay, so this is this is a technique that you would use if the Wolfe waves 2 and 4 and 1 and 3 do not converge. So you can see the green lines; they just keep on moving out in space and never really converge. So you have to force. Introduce a line and force that line to reach some point in space, a predictive level, and project it up to this peripheral line where it's connecting, where that green peripheral line extends out, and that would be the target at by November 4th. Okay, that's on the daily time frame. So let's keep on moving forward. So JPM. So here's JPM giving a bearish Wolfe Wave entry on October 11th, and then 1, 2, 3. You could have opened up a couple of positions here, but obviously it didn't go any further, right? So you have to be careful with the Wolfe Waves on the bearish side, because markets tend to kind of move higher than lower. So that could have just been profit taking. So I guess when you do take a bearish Wolfe Wave, you have to take into account profit taking and potential market correction. Okay, and those things move fast. However, if you get a bullish Wolfe Wave, you're not looking for profit taking, you're looking for FOMO, and you're looking for gap fills, okay, and projected targets. Let's keep on moving forward. Lockheed Martin, I'll skip the crypto stuff, the ones that are pairs. Las Vegas Sands, MDB, mRNA. So all of these, okay, you got one here on Micron, which is a position that I have. So here's Micron, and we've got a target. So again, these lines do not converge, so I have to force a line from 2 into some pivot. So let's pick right about here. That's the pivot right there. And then look at the time right here. So $75 by November 12th. Okay, let's keep on moving forward. So you don't want to get, if you're aggressive, obviously you can get contracts before November 12th, but if you're not, you know, I guess the general rule of thumb is just to kind of keep it safe and conservative, and you can still make a lot of money even with contracts that expire out in December. Netflix, nothing there. Neo, Nike, Nikola, Now, NASDAQ. Okay, so the nice thing about this is it just removes the uncertainty, because a lot of the analysis is done for you based on the algorithms of the Wolfe Wave. So you don't have to make any assumption about news or you know, what the market is doing with it. You just simply look for just the pattern. So this is more pattern based, applying a risk and reward sense. So here's one with UPS, which is a current trade that I'm in with one contract. So I only have one contract because I bought them right here, okay, on this candle. So we should have picked them up, obviously, here with at least 2. And then this setup right here is actually converges for you, right? So you can have a personal bias to like your favorite Wolfe Waves. A lot of people like it when wave pivot, the peripheral target line that's projecting out has a positive gradient, right? And they also like the pattern when it converges, where 2 and 4 converges with 1 and 3, because it actually gives you time and price, right, for you automatically. So this one is showing that time and price should meet on November 1st, and UPS should reach a target of 203.87. And then keep in mind there's earnings on the 26th, so that's also a bit of a problem, because there's also a gap here at 185. You know, it can also pull back really hard and then move up. And then, but if it keeps on running into earnings, then you've got a gap fill potential here at 198, and then all the way up to 209. So, of course, you got to manage your risk. We manage the risk on this. We have some members who took the trade actually on the alert or somewhere around here when it was basing on the doji. So that they said they made around 700 to 800%, even more. That's a beautiful trade setup using Wolfe Waves. So it just takes one trade, and it removes a lot of uncertainty, and you know the risk and reward, because when you take a look at the way that it entered here, and you're looking at the risk, that's a 14% move on UPS. Just catching like a 5% move on that is already a couple 100%. So had you put in, you know, 1,000 or 2,000, or depending on how big your balance is, even 10,000, that would have easily netted you at least a double to triple. Okay. So just a lot. So this is the type of risk and reward that you're looking for, and then you would take one trade. I don't know if you want to put too many of these trades. Like if you find 10 of these Wolfe Waves on the daily time frame. That's a lot. I don't think you're going to be able to find that. But if you do, then you'll probably end up seeing that your whole entire balance is in the market. So UPST, nothing there. Visa, Wish, Wow, Win, Zoom, BB. Okay, so I went through pretty much everything. No, I didn't go through everything. This stuff from the... Oh, yeah, I did. Okay, and that's just an example on the daily time frames. Now, so now if you want to trade on multiple time frames, right, and you're looking to trade a little bit more actively and also reducing your position size, you can go back here and then say create a new chart layout. And then you want to go to this select layout and maybe pick, depending on how many time frames you want to pick, right? So let's just pick maybe this one the most. That's 2, 4, 6, 8. And did it carry over all the indicators? Symbols, interval time, no. Drawings. So what I'm gonna have to do here is I think the fastest way is probably just first getting the Wolfe Wave back in there. So let's go ahead and add that. Okay. And then let's create a template calling it, oh, I have it right here. So there's a Darvish channel in there, so let's add that customizer graph finder. So now I got them all back in there with the Darvish channel addition. And let's just save it. So I'm going to save that as the Wolfe Wave. Right? You don't need to save the symbol or an interval. Okay, and then now I have this all the indicators saved. So when I go into, so now I can add each of those templates. So I created a template for the Darvish channel, Wolfe Wave, and the TTM Squeeze. So then if I go into this chart right here and select it, I can just click on Wolfe Wave, and then it applies the whole entire thing, right? So I can just do that. Again, it just makes the whole, and maybe I can make that a favorite, right? So let's do that and make that the unfavorite. So when I just click on W, it applies here. So it's nice and efficient. Wow, it's fast. That's really nice. I like it fast where it doesn't lag. Okay, so then we have 8 chart windows open, and now you want to just change the time frames. So you can do the top from the bottom, bottom to the top. So let's say I want the shorter time from the top. So I do 1 minute. Then I go to 3 minute. Go to 10 minute. Go to 15. 30. 79. 4 hour. Or 195. You want to pick a time frame that's not common, right? Uncommon is your edge. And then daily, and there you go. Then you want to also include the after hours. Okay, so extended hours have to be on. Okay, which I think they are all on. Yep. So you just, when you click on each chart, it should show EXT. And once you've done, it won't show EXT on the daily. And then once you've done that, you would just save it. And then give it a name called, you know, Wolfe Wave after hours on. And then what you can do is you can create another set where the extended hours are off. Okay, so you can get more information and more patterns developing on different types of scenarios. And then you want to save that. Okay, let's rename it as off. Okay, so now I have off and on. So I'll load that off and so I didn't save the on. Okay, anyways, so once you got that done, then you can just go through your watch list and then scroll through each one to see if you can find a Wolfe Wave. So here on Apple or Airbnb, you have a Wolfe Wave where time and price should meet at around October 18th. Doesn't have a TTM squeeze, so the likelihood of expansion here, where price is expanding in this direction, is lower. So you probably don't want to take this trade, but you can still evaluate it, right? Because the risk and reward is approximately 2.5, 2.6%. So you would think you would ask yourself, do you want to take this trade using how much risk to make 2.61? And probably that's something that most people wouldn't want to take. You want to find the trades where you're putting small risk of about 1,000, small risk relative to your net liquid. That's like, you know, could be $50 for a $1,000 account to $1,000 for maybe a $10,000 account, or $500 for a $10,000 account, and then have the risk reward such that that $500 could turn into $5,000. Okay, so this trade is not going to be doing that for you because it's only 2.5%. So keep on scrolling down. So Adobe, and you just scroll through them over and over again until you find a Wolfe Wave on a specific time frame. So there you go. One is Biogen. So Biogen has a Wolfe Wave. That's a bullish Wolfe Wave with a target of 288 and an A6. So actually, you know what? This one actually could end up moving higher. So you can evaluate this by taking a closer look. And yeah, one of the problems here is that time and price does not converge, because you can see 2 and 4, they extend out but never meet with 1 and 3. So then you would create a fudge. First of all, let's take a look at the risk and reward. So if I got in here and it makes a move to here, yeah, 4.26% is a very hard sell, so I probably won't want to take it. But let's just, for exercise purposes, let's just project a line at around this pivot right here. And right on earnings, it's expected to be around 291. Maybe one after earnings. Okay, so let's keep on going through this together. BKNG. So BKNG has a bearish Wolfe Wave, and you know it didn't trigger, so you wouldn't get into it, but we can evaluate it if we did. So it's a 4.5% move. Keep in mind this is a 4-digit stock. BTNX, nothing there. Berkshire Hathaway, BTC, BYND. Chewy's got a bearish Wolfe Wave, right? And if you're just starting off, I would recommend doing this on a daily time frame. Okay, looking for daily, and you're not going to find a lot. Okay, you're gonna they sell them up here. Okay, crowd stake. So this one looks interesting on this bearish Wolfe Wave. So if you're looking for potential profit taking, you can see that the risk and reward from here down to somewhere around here is around 16.5. So that's pretty good. Now, right, the time and price should meet on October 15th. So that would be right about here. That's a 17% move. So this one actually looks like a potential trade setup, okay? And then you would risk maybe $100. And that $100 could potentially turn into 1,000. So, but we're not, you know, puts in a strong market like this, you don't want to really rely on the targets being achieved unless the market turns bearish. But at least filling, you know, half of that, which is an 8% move, 9% move, is achievable. Okay, so right around that gap. Okay, so I hope this tutorial serves you well, and keep in mind you should have cover both the extended and the regular hours, but I think this is a very efficient, non-biased way of trading. the key here is looking for the trade setups that give you at least minimum 5%, 5% risk and reward, which would equate into options around 200, 300%. Ideally, you want to look for ones that give you anything more than 10 to 15 and 20%. Those are great, but they don't happen very often. However, the risk is really limited, okay? Because you're not going to go all in, because the whole idea here is risk small and make big gains. Thank you very much and have a great day.